I'll quickly cover these AlphaSIP slides. So if you go to our website, you will see that there are our AlphaSIP strategy. This is available in 3 variants. The first variant is the AlphaSIP tax saver variant. There's no minimum or maximum amount. The only amount that we accept is 2.5 lakh rupees per year in this. The second one is AlphaSIP Pro, where and in AlphaSIP tax saver, as I just mentioned, the entire maturity proceed. So there's a lock-in of 5 years, but at the end of 5 years, you can take your money out and the entire maturity proceeds are tax-free. The only thing that you have to remember is your cumulative investment in all ULIPs. So if you buy one 2.5 lakh policy from us, but you already have another 2.5 lakh rupee policy that you have bought from somebody else, then only one 2.5 lakh rupee policy will be eligible for being tax-free, right? So cumulative 2.5 lakh is what you have to take care, you have to ensure. The second option is the AlphaSIP Pro. Minimum amount required is 5 lakh rupees. So usually 5 lakh was the minimum we have had for a very long time. We introduced this AlphaSIP tax saver option with 2.5 lakh rupees just because a lot of people pointed this out to us that they are not being able to avail the tax-free provision of ULIPs if we keep the minimum at 5 lakh rupees. And then there is a 10 lakh rupee option, which is AlphaSIP Pro Max. The only difference between Pro and Pro Max is at the time of onboarding, you can request for one-on-one call with me, and then once a year we'll have there will be quarterly review of your portfolio with a dedicated RM that we will assign to you. But in AlphaSIP Pro Max, there will be 1 yearly review of your portfolio directly with me. So these are the 3 variants in which we offer the AlphaSIP strategy. This is there on my website. Once again, this is the website I'll provide we'll upload this video on my channel, and I'll provide a link to this video. This video, anyone who is investing, I'll once again request that you must go through this AlphaSIP strategy. I have explained what is the underlying logic, what is the historical performance of the strategy, and from that historical performance, how much should you deduct to account for when you invest in a ULIP. There is part of your money goes towards investment. 99% goes towards investment. About 1% goes towards, you also get an insurance cover. And the premium for that insurance cover is deducted from the investment amount itself. So about 1% of your investment goes towards paying for an insurance cover. So some amount of your return will basically be offset because of this insurance component. And I have also indicated in this video itself how much of the returns you should subtract based on your age to account for the deduction that you will get because of the insurance component. So typically, let's say the thumb rule is if you are up to 45 years old, if I am able to generate a return of 15% for you, after taking into account insurance, you will probably end up with about 14.1, 14.2%. About 0.8 to 0.9% will go towards paying for the insurance component. The remaining will accrue to you in the form of returns. So I have covered all this in this video. I will request once again everybody, if you are planning to invest, please go through this video. Couple of quick terms and conditions that I want everyone to be aware of if you are planning to invest. As I mentioned, there is a lock-in of 5 years. Lock-in means if there are, once you start your SIP, the first year amount, so if you start with a 2.5 lakh rupee per year investment, firstly, in the first year, the entire 2.5 lakh rupee that is due in the first year, that we require you to invest upfront at the start of the investment. From second year, you can continue to do 2.5 lakh rupees per year, or you can choose to move to monthly SIP from the 13th month onwards, right? And the implication of the lock-in is that once you start, you have to continue the SIP for a period of 5 years. You cannot stop the SIPs. You cannot withdraw the investment. The lock-in lapses at the end of 5 years. After 5 years, because for you to get that tax-free maturity, the requirement is you have to stay invested for a period of 5 years and not withdraw your corpus, right? What happens if you are not able to continue your investments for 5 years. Let's say if there is a family emergency, you are not able to, if you have to stop your SIP. Typically, what happens is once your SIP, if let's say at the end of 2 years, you are not able to continue your SIP, the money will go into what the ULIP companies call some kind of a suspense account. On that suspense account, the ULIP company will charge you approximately 500 rupees per month as a penalty for the till the time the investment completes 5 years. 500 rupees per month translates to 6,000 rupees per year. So let's say at the end of second year, you discontinue your SIP. For the remaining 3 years, there is a charge of 6,000 rupees per year. So 18,000 rupees you will end up paying over a 3-year period. That will be deducted from your investment, and at the end of 5 years, you will get back whatever is there in the investment after deducting this 500 rupee penalty. This penalty is usually called surrender charges, right? This surrender charges is not really so much of a the second point is, while this money is in suspense account, it will earn interest at the rate of about 5 to 6%, the liquid fund kind of returns. So usually the surrender charges, this 500 rupee per month charge that I'm talking about, usually the interest that the money earns will be, usually the penalty amount will be taken care of from the interest that the money earns. Surrender charges, according to me, is not the biggest problem if you are not able to discontinue, if you discontinue SIP. The bigger penalty that you will incur is that if you discontinue your SIP and the money goes into a suspense account, then whatever money is invested, I do not have access to that money anymore, which means that if you discontinue your SIP at the end of 2 years, for the remaining 3 years, I will not be able to do any rebalancing on whatever money you have invested. So that is a bigger penalty, because the surrender charges, whatever the ULIP company is going to charge, I think the interest on the money is going to more than take care of those charges. I think the bigger penalty is in the form of we not having access to the funds and not being able to rebalance your portfolio. So this is something that you should be aware of, right? So you should if you start, be sure that you have the capacity to continue this for 5 years. There is a second condition. What happens if you discontinue at the end of 5 years? Now, the ULIPs that we are offering to you right now is of HDFC Life. The ULIP plan is called Click to Invest. Click to Invest has a minimum SIP. When you start the SIP, the minimum SIP for Click to Invest is actually 10 years. So we have to specify that we are starting the investment is for a period of 10 years. You have to start off while signing up. You have to start off with a period on the condition that you are going to do a SIP for 10 years, but you have an option to discontinue your SIP after 5 years. If you discontinue SIP after 5 years, there are no penalties, there are no surrender charges, nothing. But if you continue, but one thing that you have to keep in mind, at the end of 5 years, if you discontinue, at the time of starting, the HDFC Life's requirement was you will do the SIP for 10 years. So before 5 years, if you stop, you have to incur surrender charges. After 5 years, if you discontinue, then HDFC Life, there are no charges. But HDFC Life, in that case, will allow you to keep your money, whatever you have invested, only for a period of another 3 years. So I will be after 3 years. So if you discontinue your SIP at the end of 5 years, HDFC Life will either you withdraw everything at the end of 5 years or you do some partial withdrawal. But if you discontinue your SIP at the end of 5 years, then HDFC Life will mandatorily redeem all your money and return the money to you at the end of year 8. So at the end of 5 years, you stopped your SIP. At the end of year 8, 3 more years, HDFC Life allows you to keep the money with us. At the end of 8th year, the money is mandatorily redeemed and returned to you. If you stop your SIP after 6 years, then the maximum that you can keep the money with us is for 9 years, 3 more years, 6 plus 3, 9. At the end of 9 years, the money will be mandatorily. So we will be able to rebalance your portfolio only up to year 9. After that, the money will be mandatorily redeemed and the money will be returned to you. If you continue your SIP for 10 years, you complete your SIP for 10 years. At the end of 10, after 10 years, you can continue your SIP, but even irrespective of whether you continue your SIP or don't continue your SIP, you have the independence to stay invested for up to 40 years. And so we will continue to rebalance your money for up to 40 years if you complete a 10-year SIP. Right. So I'll just repeat that once again. Before 5 years, if you discontinue, then you incur this surrender charge of 500 rupees per month for the period from that point up to the end of 5 years. After 5 years, if you discontinue, then you can keep your money maximum for another 3 years. So we'll be able to rebalance your money only for 3 more years. So if you discontinue after 5 years, then your money will be with us for maximum 8 years. If you discontinue after 10 years, then you can after 10 years, you can withdraw your money or you can stay invested for up to 40 years. So that's the lock-in condition. In terms of regulation, we get asked this question a lot. We are regulated, but SEBI is not the regulator regulating us. SEBI is the regulator for the mutual fund space. We get regulated by an entity called IRDAI, insurance regulator. The insurance regulator of our country is called IRDAI. They are the one regulating us. But I want you to keep in mind one nuance. The entity which is regulated, the broker code is in the name of somebody who is our employee. So he complies with all the IRDA requirements in terms of accepting your investments and ensuring all the policy servicing requirements are met. My company, which is metacaps.ai, we are not an insurance broker. We are only a technology company. And our role is the company's role is to provide the technology to do the rebalancing as per our logic. So metacaps.ai itself is not directly regulated by IRDAI. However, the insurance agent is regulated by IRDAI. The insurance agent is somebody who is a part of our team. So it's the team member who is under SEBI's purview. The rebalancing part is being done. Having said that, it's not as if that we are doing this rebalancing without your control. The rebalancing is happening explicitly based on your consent, which you can withdraw at all times. So I'm going to cover how the rebalancing works in just a moment. Typically, what happens is every time we rebalance, the ULIP company will send an OTP to your registered email and phone number. Somebody from our team will reach out to you. Only if you share that OTP, will be punch in that OTP and complete the switch for that month. So that way you continue to have complete control over the rebalancing. So even though metacaps.ai is not directly regulated by IRDAI, it's not as if that we can do the rebalancing without your consent. Right. So you at all times, your portfolio is under your control. Okay. Charges I just mentioned, there is nothing in the first 5 years. At the end of 5 years, basically we'll give you two options. After 5 years, if you want to continue with us, either we will charge you around 1% of the AUM per year as a charge, or we will give you also the option of investing in redeeming the current policy gradually and moving that money into another policy. So that gives us some brokerage that can cover us for a couple of more years. So that way you don't have to pay anything explicitly to us. So these are a couple of options that we can explore at the end of 5 years. But in the first 5 years, there's nothing that we charge you. It's like regular mutual funds. So we make our money through the brokerage that we get from the ULIP company. And the last slide is how is the rebalancing executed? As I just mentioned, every time the rebalancing is done, there is a OTP that will be sent. And this is something that I want everyone to be aware of, that there is a manual. See, earlier we used to do this with using ULIPs of this company called Bajaj Allianz. With Bajaj Allianz, we had done an integration with them. So all this manually collecting OTP from the customer and all was not required. I used to seek a consent from the customer once. You could give me a consent through a OTP once, and that consent was valid for 1 year. Based on that consent, I can rebalance your portfolio without having to go back to you every month. That was earlier in the Bajaj scenario. Unfortunately, Bajaj Allianz, after October 2024, they have introduced something called allocation charges. So as a result, there's a allocation charge is nothing but a entry load that they have started to charge. So the minimum allocation charge, that lowest allocation charge available with them right now is about 2.4%, which means that allocation charge is nothing but entry load. So if you give me 1 lakh rupees, out of 2.4, 2,400 will be gone towards allocation charges. Only 97,600 will get invested. And as a matter of principle, we try not to invest in allocation charge ULIPs. HDFC is the only ULIP company right now which offers a pure zero allocation product. So we moved to HDFC, and currently we offer only ULIPs of HDFC Life. However, with HDFC, we don't have that technology integration at this stage. We have to do this monthly rebalancing manually by texting you or calling you every month to get the OTP from you and punching in the OTP, and then we have to then only the rebalancing can be done. So you should sign up for this only if you're comfortable with this regime. Every month, in the first couple of days, we will in our preferred way of connecting with you is WhatsApp. Somebody from our team will ping you. All you have to do is just share the OTP with us that you have received on email or WhatsApp, email or SMS, and we will complete you don't have to punch in anything. As long as you're comfortable sharing the OTP, we will complete the rebalancing for you. But you have to be aware that this manual leg is there. So you should be available for sharing the OTP in the first couple of days every month for the next 5 years. If you're okay with that, then only you should sign up for this rebalancing regime. Last point, we started life as a mutual fund company. We might move to ULIPs not very long back. So our ULIP app is still under development. So at this stage, once you start, immediately I don't have a live app through which you will be able. So on our app, the earlier policies that we sold while we were distributing Bajaj Allianz policies, they are visible on our app. But with HDFC, we are still doing the tech integration. So in the immediate future, we will not be able to show you your portfolio on our app. It will take a couple of months for us to finish that integration. After that, the app will be available for you for the first couple of months. We will have to get, if you want to see your portfolio, we'll basically try to get a statement for you from HDFC Life and share that with you. So that way, for the first couple of months, that's the only way you will be able to keep a track of your investments through the statements from HDFC Life. Second, with HDFC Life, as I said, right now the integration is not yet complete. So once we complete the integration, what they have promised us is that to begin with, they don't refresh the portfolio values every day. Typically, they have promised us that they will refresh the portfolio values twice a month. So every 15 days, the portfolio values will get refreshed, and accordingly, we will refresh the portfolio returns as well. So first couple of months, we have to live with some of these teething problems which exist because we don't have that integration with HDFC. I promise to you, this is something that HDFC Life is keen to address in a couple of months. But for the first couple of months, these are some of the teething problems we have to contend with. And I'm being very upfront before anybody signs up that if you're okay with this, then only you should sign up, right? And I perfectly respect if you want to sign up only after all these things have been cleared. But as of now, we are, as I've mentioned in my videos, we are accepting clients only up to 31st March, and we will accept only 100 clients. So if in this batch, you should join only if you're okay with these couple of teething problems for the next couple of months. And my last point is on our app, we will one thing that we will not display in our app, even when our app becomes fully live, we will not show you how much of the money is in equity, how much of the money is in debt. that's a proprietary information. Because, the way, unfortunately, what happens is that if we start showing you how much of your money is in equity funds and how much of your money is in debt funds, then this information can be, we have had clients earlier, very bad experiences where people have bought a 2.5 lakh policy with us, but they are applying the logic to rest of their portfolio. We have had one extreme case where the one gentleman actually started to sell this information. So he started his own wealth management app and he started using our proprietary information to rebalance, started accepting clients on his app, and he started rebalancing based on what we were rebalancing on his portfolio. So that's why we have to make sure that this asset allocation information remains is a proprietary information. This is not something that we will reveal, that you will be able to see. So in the app, you will be able, once the app is fully live, you'll be able to see what is the current value of the portfolio and what is the per year, the IRR, the return CAGR that you are clocking right now. That will be available to that once the app is fully live. That will get refreshed every day, but you will not be able to see even after the app is live how much of the money is in equity and how much of the money is in debt. That's one information that we will keep concealed. So once again, you should invest only if you're okay with this condition. So that's it from my side. I'm done with the presentation. I'm happy to take questions if anybody has any questions regarding AlphaSIP.
Yes, hi Indraanil, Tamojit again.
Yeah.
So my question is related to AlphaSIP strategy only. So I believe that you have posted on YouTube that the AlphaSIP strategy is tax free.
Yeah.
So is it tax free like after paying the tax it is 12%, or like we're making 12% returns but that will be tax free?
Okay, so the way this works is there are two places where you incur tax. So in AlphaSIP strategy, what we essentially do is base every month on the first few trading days. Our models tell us that what should be the percentage of equity in our client portfolios. So if my models are telling me that you should have 60% equity this month, that means 40% should be in debt, right? So I will rebalance the portfolio accordingly. Next month, let's say my models are telling me you should be 75% equity, 25% debt. So I have to move from 60 equity to 75. So 50, I have to switch 15% from debt to equity in order to take the equity exposure to 75%. Now, every month when you do this switching in order to rebalance your portfolio, if you do this using, let's say, mutual funds, then every time you switch, it leads to capital gains. And since you rebalance every month, most of the gains will very likely be short-term gains. So because of those short-term gains, you have to pay capital gains tax based on short-term capital gains rates in that financial year itself, right? And then a couple of years down the line, after some time, if you want to withdraw the money, you have to pay tax once again on the overall cumulative gains that you have got when you redeem the money. In case of what we do with the reason we make use of a very low cost breed of ULIPs called zero allocation charge ULIPs to execute the AlphaSIP strategy is because in case of ULIPs, there is a lock-in of 5 years. So because of this lock-in, even if you switch between funds, the fund is not coming back to your account. So since you don't have access to the funds for 5 years, the government doesn't consider the switch to be a realized gain. And that's why any switching that you do during this lock-in period of 5 years is not taxable for you. And at the end of 5 years, I want to clarify on the tax-free aspect. At the end of 5 years, if you redeem everything, so let's take an example. If you invest 2.5 lakh rupees per year, in 5 years, you have invested 12.5 lakh rupees. If let's say we are able to generate a return of 12% over this 5-year period, then at the end of 5 years, this 12.5 lakhs would have become 17.5 lakhs. So you generate a gain of 5 lakhs. 12.5 has become 17.5, right? If you redeem this entire 17.5 lakhs at the end of 5 years, this entire 5 lakh rupee gain is tax free for you, as long as the investment amount was within 2.5 lakh rupees per year. If the investment amount is more than 2.5 lakh rupees, ULIPs are tax free to the extent of first 2.5 lakh rupees per year. Any investment, if you have two policies of 2.5 lakh rupees per year, if you are investing, let's say 2.5 lakh rupees per year in policy A and another 2.5 lakh rupees per year in policy B, then the first policy's maturity proceeds are tax free. Second policy's tax maturity proceeds get taxed at 12.5%.
So if there are three different individuals who are making the ULIP from a same family, then it will be tax free for 2.5,
All the three,
2.5.
yes. We have clients who have done 9 policies from the same family.
Understood. And what factors this model works on? Like, the factors that we usually discuss regarding the bond yields and
Correct.
all these
Usually
factors.
global liquidity, so things like reverse repo, US government 10-year bond yields, yield curve, to what extent is the yield curve inverted, move index, this whole bunch of things, about 15 odd parameters that we track. And based on that, the final output is every month, this model tells me this much percent of the portfolio should be in equity, this much should be in debt. So that's based on that, we rebalance every month.
Understood. So again, the equity and the debt model that you mentioned about 60-40 or 70-30 based on your model, which is indicating that. So like the equity that you allocate here is only the Indian equities, or it is like global equity?
So in much as I would like to have some exposure, especially to US markets, since I invest through ULIPs, the ULIP funds are Indian funds. So if the ULIP fund itself has some exposure to US or international equities, then that's the only thing that you can have. But most of the funds that I invest in, I don't think they invest outside of India. They are primarily Indian equities.
Okay, one last question that I have is regarding the ULIPs that you invest in. So your company charges some percentage out of the mutual funds that we're investing, or I mean the ULIP that we're investing, or it is a one-time charge that you take for the entire 5 years of 10 years, etc.
So we don't charge anything. I'll cover the charges in my presentation, but since you asked, you don't. So it's similar to mutual funds, similar to regular mutual funds. We get a brokerage from the ULIP company. We don't charge anything to our customer. But the only problem with ULIP is we have. So in mutual funds, you get a commission every month based on the size of the client portfolio. A percent, typically about 1% of the client portfolio is what you get as a brokerage in case of mutual funds. In ULIPs, what you get is one lump sum upfront payment at the beginning once the policy starts, and typically you get nothing after that. So if you do your calculation, usually the upfront commission that we get is usually let me put it this way: the present value. If somebody was doing a SIP in mutual funds with me for a period of 5 years, and the brokerage that I would earn from that 5-year SIP over a 5-year lifetime, if I do a present value of that brokerage, I get that money. The present value of that 5-year lifetime is what ULIP company pays me. So effectively, the brokerage is similar for me in mutual funds and ULIPs. The only problem with ULIP is that the brokerage that I get is roughly equivalent to the lifetime brokerage of a 5-year lifetime brokerage that I would get in mutual funds. So typically for me, I don't get paid anything. So what I get from the ULIP brokerage covers me roughly for a period of 5 years. So at the end of, and that's why in my pricing, I have mentioned that at the end of, if you continue beyond 5 years, after that, the lock-in has expired. So you are at a liberty either to withdraw your money, or if you continue, then there are a couple of options that we have to figure out, because either we will create at this stage, my base case pricing is we will charge you 1% of the AUM from year 6 onwards. The second option is we can invest your money in year 6, we can start another ULIP plan for you, and start migrate your money from first policy to the second policy. So that will help us cover ourselves for another 5 years. So there could be some of multiple options that we can explore at the end of 5 years. But in the first 5 years, I don't charge you anything.
Got it. So once we switch the funds, or let's say that we switch to some other AUM that you mentioned right now, so that 5 years money will be credited to our bank account, and again the investment will be done. Am I right?
Yeah. So at the end of 5 years, if you buy another ULIP policy, then the money will have to first come back to your account and then will have to be reinvested in another policy.
Got it. That is one. And second is is there a lock-in period of 5 years?
Yeah. So ULIP has a lock-in of 5 years. Only after 5 years, can you take your money out.
Got it. Thank you so much, Indraanil. I just wanted to have these questions. Yeah.
Thank you.
Thank you, Indraanil ji, for very
Please,
transparent information.
Can I request
I'm
you to
Pranav.
introduce yourself, please?
I'm Pranav again.
Hi, Pranav.
Yeah.
Hi.
Yeah. Thank you for very great content, information, and transparency.
Thank you.
The thing is, normally all those who are tracking you and those who are your big fans must have portfolio of a very large amount, right? So doing a SIP for 5 or 10 lakh may not move the needle if we compare to the entire portfolio. So, so the thing is,
we have a lump sum product, if you're asking me that.
Yeah. So
you can invest a lump sum with us if you want. So these are called single premium policies. We have a lump sum option in HDFC Life itself. The same rebalancing will be applied to a lump sum portfolio. The only thing is, for lump sum, the minimum requirement is 25 lakh rupees. So you can do a lump sum investment.
Yeah, but the thing is, in that also you won't be able to sharing the equity and debt allocation. Am I correct?
Yeah. We won't give you the split. So that's a proprietary information, and I explained why we don't, right?
Okay. So you may charge whatever fees convenient to you, so that we can at least get into the right direction or something like that, because still the portfolio is considerably very, very large, and even though applying 25 lakhs and moving this entire portfolio into one basket with a lock-in parameter won't fit or size to our requirement, at least my requirement. So if you can think on that, because I'm sure all those who are your followers and looking to the information or the content you are creating must have built some decent portfolio. So just try and think. And another question is, I would like to connect offline if possible.
So I drop a message on our number, sir. My team will
sure,
get back to you. Sure.
Mr. Guha, Devesh here.
Yeah.
Can I ask a question?
Yeah.
Now, Mr. Guha, will the insurance company not give us a login ID and a password, wherein we can, view the status of the policy or the investment?
You can. That's a slightly convoluted way of doing it. But so with HDFC Life, however, the transaction level data is not readily available. And so that has to be requested. So and we also request them to, if they provide that to you, we also request them to provide that with a lag, for the same reason, that we don't want people to replicate the portfolio that is under our management.
So because if you have the login ID and a password, you can always scan it, at the end of the month, or even with the time lag, of 15 days or a month, you would know what's the equity and what's the debt.
Yeah. So as I said, I mean, they give you a limited view, but not a transaction level view of exactly how much we switched. That's not so you can get that information, but you'll have to make a special request through us, and we'll have to get you that statement, and then with some lag, that statement is provided.
So So the insurance company doesn't give the login ID and the password.
They do. You can log in through the HDFC Life account as well, but the statement that is available through the online account that will have very limited information. It won't have the transaction level data that you are looking for, through which you can actually start replicating the same allocation in rest of your portfolio.
So it will just give what's the debt and what's the equity, in a component, and that they could. That I'm sure they would be giving.
Yeah.
Okay. Thanks, Tom.
Thank you.
Hello, Indraanil, Dr. Pandya here again.
Sure.
Can you hear me?
Yeah, I can hear you. Please.
Yeah. I understand now this is all mostly going to be linked with only life insurance, ULIP only, right? So are you planning for getting actually full-fledged? Because I think then you will be also dependent on the fund managers of HDFC to take up which stock and which not to buy. So are you planning in any terms to get into mutual funds and where we can invest directly with you in mutual funds?
Pray for me, sir. One day, hopefully, I start my own ULIP company.
Barring the insurance component out of it, so that because there is going to be some issue. Because there are going to be life charges. What do you call it as for the ULIP? Apart from the I understand there is zero allocation charges, but there are going to be other charges also, right? Like life insurance charges and all those charges which you have explained in your YouTube video.
I understand. So, see these mortality charges. About 1% go anywhere between 0.5% to 1% goes towards this mortality charges. If I generate 15% for you, if you are 40-45, you will probably end up with 14%, 1% less. If you are in your 20s, early 30s, you will probably end up with 14.5. This is for a SIP. If you do lump sum, mortality charges are is close to zero. Whatever you invest, if I generate 15% for you, the deduction will be about 0.25. Which means basically if I generate 15% for you, you will end up getting 14.75. In case of lump sum. So in lump sum, the difference is very less. The impact of insurance is slightly higher in case of a SIP. Having said that, sir, I still think it's if you compare it to the tax benefit that you get, in case of if the investment is 2.5 lakh rupees, the entire maturity is tax free. Even if it is more than 2.5 lakhs, the entire switching is tax free, right? And even the debt component gets taxed at the rate of 12.5. In case of mutual funds, debt gets taxed as per your slab, right? So in lieu of that, the insurance component hit that you take, in my view, is relatively small. I would argue that it's even necessary, right? Because let's say if you're trying to plan for a goal, if you have a child, you're trying to save up for the college admission of your son. He is right now in class 5-6. In next 5-6 years, he will go to college. You want to build a corpus for your child to pay for his college fees. Wouldn't it be great if you also if that plan is backed by some kind of insurance to take care of the risk that, God forbid, if something happens to you during this 5-6 year period, then the goal is not adversely affected. And the cost of that insurance is I'll actually do a video in future to explain how the insurance component of that you pay in case of ULIP is actually lower than so the way this works is, since you asked this question, see, if you buy a term plan of, let's say, 1 crore rupees, for the next 15-20 years, you pay the fixed premium based on a cover of 1 crore. So whatever is the premium payable for a 1 crore cover, you keep on paying that amount. In case of ULIP, let's say you are over a 10-year period, you're doing your SIP in such a way such that in 10 years, assuming a return of, let's say, 12%, in 10 years, you will get to 1 crore. In this scenario, what typically happens is that the premium that you pay every year for the insurance component keeps on coming down. because the ULIP company charges you for the insurance component only for the amount by which your insurance corpus, if your investment corpus is short of 1 crore. So let's say if you are investing 1 lakh, let's not talk about 1 crore. Let's say if you're targeting a corpus of, if you're investing, let's say 1 lakh rupees every year. So and against 1 lakh rupees, you get an insurance cover of 10 times of that, which is 10 lakh rupees, right? In the first year, the insurance premium that you have to pay is the difference between 10 lakhs and the amount and the money that you have already invested, which is 1 lakh. Whatever money you have invested, that is considered as a part of the insurance payout, and hence there is no premium that is charged for that component. So in the first year, you have paid 1 lakh. Your insurance cover is of 10 lakhs. What the insurance company has to pay you if something happens to you in first year is 9 lakhs. So you pay insurance premium based on 9 lakh. Second year, you pay another 1 lakh. Your total investment amount goes to 2 lakhs. Second year, the insurance deduction will be, so now you are short of 10 lakhs to the extent of only 8 lakhs. So your insurance component premium will be based on a 8 lakh rupee cover. So as the investment amount is increasing, as you are coming closer to the 10 lakh rupee insurance value, the insurance premium keeps on coming down.
So as my age increases, what I understand is, as my age increases and as the funding value increases, my premium is going to come down.
Premium is going to come down, and once the fund value exceeds 10 lakhs, insurance premium deduction stops. And which is how I think insurance should be. Instead of, in case of a term plan, even if you are now close to your goal, you keep paying based on 1 crore, based on that final terminal cover. Every year you're paying the same premium. Whereas here, as you keep getting closer to the goal, the insurance premium payment comes down and ultimately becomes zero. So I certainly think that for about a 0.8, 0.9% hit to your return, if you're covered, if your goals are covered, I think it's not such a bad thing to pay for. And well, as I said, in case of lump sum, the insurance component is negligible. It's 0.25.
Just one more thing which I need to clarify was, if you take the policy in the child's name, we will not be the cover, right? The cover will be, or is it going to be the proposer who is going to be the cover, or how is it going to be?
Like the insurance cover. Then the insurance cover is in the name of the child, and in that case, the difference between the impact of mortality is close to zero.
Yes.
If it's a child, your maximum. If I am able to get you 15%, you will probably end up with 14.8 or so.
Okay. Okay. Yeah. The proposer is not.
Proposer is not covered. The child is covered.
Child is covered. Okay.
Yes.
Thank you. Thank you.
Indranil, sir. This is
Naval. Kumar this side.
This is Naval.
Yes, sir. Go ahead.
Yeah. So my first question is, these HDFC ULIP schemes, do they declare their NAVs like every day or
every day?
Every day.
Every day.
And you are saying that in our monthly statements also, we will get the exact names of the schemes, underlying schemes in which the amount is invested, including the debt scheme and also the equity scheme.
No, sir. I'm saying that in our app, we will not show you in which fund your money is. Because if I reveal that, then I'm basically, if I tell you this much money is in equity, this much money is in debt, then that portfolio can be replicated elsewhere. So we only tell you the total value of your portfolio, equity plus debt right now is so much.
Okay. My another question is, when I start AlphaSIP, probably, let's say based on the prevailing market conditions, I might be currently interested in a large cap plan, large cap plus debt. And maybe 1 or 2 years down the line, I might be interested in mid cap plus debt plan. So is that possible to do a switch between large, mid and small cap plans?
Possibly. That's possible.
Okay. Okay. Thank you.
Hi, sir. Kumar this side. So one of the question is that, is it cheaper for us to purchase this same policy click to invest directly via HDFC versus purchasing via you, or it's
same charges? No difference.
No difference. And secondly, is the payment allowed via credit cards or it has to be a bank account swipe?
Yeah, I think it was allowed till last year, but they have
Okay.
stopped. I used to pay my my last year's policy were from Bajaj. I used to invest a sizable amount. काफी सारे
Oh.
points मिलते थे, but that has ended now.
All right, sir. And thirdly, sir, I mean, there is always a fear in my mind that, this government changes taxes very abruptly. So this is only fungible and, profitable only if it's tax free, right? So do you see any underlying risk of government making ULIPs as
Yeah,
taxable?
entirely
I mean,
possible. And that's a very valid question. Thanks for asking that. See, government is entitled to make changes in taxes and still worse, make it retrospectively applicable. But the current government's track record has some consolation for us. So last year they changed the earlier for ULIPs have been taxable since 2021, but non-ULIP insurance policies, which are essentially called traditional policies. In case of traditional insurance policies, the maturity proceeds used to be tax-free without limit. For any amount of investment, it used to be tax-free. Last year, Madam Sitaraman introduced a cap of 5 lakh rupees for non-ULIP insurance plans. Only if you're in case of ULIP, the cap is 2.5 lakhs. Non-ULIPs, it is 5 lakhs. Up to 5 lakhs, if you're per PAN, the maturity tax proceeds will be tax-free. Beyond that, the entire maturity proceeds are taxable. But when she made that change, any policy that had been bought already till that up to that point was exempt. So if you if the same logic is, I can only hope that can this change? Entirely possible. But my sense is, even if it changes, then as long as you start your policy now, the earliest it can change now is next year's budget, right? So even if it changes in next year's budget, any policy that you start now will continue to enjoy that tax benefit.
Okay, sir. Lastly, sir, one line on why always, print media and, news media, I keep a close track on. They always discourage to go for ULIP. I've gone through the UPPT, but it sounds interesting to me, especially with the non-taxable feature. But why generally the experts of stock markets and media generally, discourage ULIPs and recommends to go for pure insurance and keep your investment?
Yeah, therefore, all the right reasons. You should stay away from 90% of the ULIPs are absolute snake oil. I'm not a big fan of ULIPs, and it was not until 2020, only in 2023, we started recommending our clients to start. We started offering AlphaSIP through ULIPs, and most of that criticism is valid. The reason is 99% of the ULIPs have what are called allocation charges. Allocation charges, as I explained, is equivalent to entry load. And in case of mutual funds, entry loads were charged by mutual fund companies in the 1990s and early 2000s. 2009 mein SEBI banned entry load. So, but in mutual funds, even during times when entry load was there, it used to be around 1 to 2%. So if you invest 100 rupees, maybe 1 rupee or 2 rupees will get deducted. 99 or 98 to 99 rupees will still get invested. In case of ULIPs, allocation charges continue to exist even in 2025. And what is worse is the quantum of exit of this entry load. Yeah, it's in most ULIP companies will charge you entry load of about 6 to 10%. So you invest 100 rupees, only 94 gets invested. 6 rupees taken out as a charge. So 94, so first it has to grow to 100 rupees before you get, tab tak to your return is negative. Once it goes above 100, that's when you start to see returns. So because of this, so in ULIP, entry load is the same, in ULIP parlance, it's called allocation charges. And because of these very high allocation charges, most advisors, most personal finance experts will advise you don't do ULIPs. And I have also advised all my clients not to do ULIPs until sometime in late 2022, early 2023. Finally, ULIP companies had to change course. They had to start, because they realized that, if they have these high charges, they will continue to lose customers to mutual funds. That's when they came up with what this new breed of ULIP called zero allocation charge ULIP. So zero allocation charge ULIP has zero allocation. Zero allocation means there is no entry load. 100 rupees invested, everything, whatever you invest, everything goes towards investment, right? Only after these allocations, zero allocation ULIPs came into existence, that's when we started recommending to our clients that ULIPs are probably a better way to execute the AlphaSIP strategy. But you have to ensure, anybody approaches you with a ULIP investment, you should first ask ki allocation charges kitna hai. If there is maybe 1 to 2% allocation is still okay, but anything more than 1 to 2%, you should completely reject.
Sir, last question. Sir, if the Nifty rise is expected to give a 11-12% return, say in the 5-10 years, I know it's a very difficult question, but again, in a ballpark estimate, do you think via this alpha SIP strategy will be able to match that return? If not, beat or kind of, with the lower performance, or it will match kind of Nifty return?
The strategy video that I have shown, you can go back and have a look at this. The range, I've explained the historical performance of the strategy using some of the mid-cap funds that we have historically used as part of the strategy. The worst, see, in case of Nifty, the median case, the average case return is 12%. Worst case return, when markets don't do well, returns can even 5-year returns can even go negative, right? In our case, the median number is about 18-19. The worst case number is 12. This is, of course, historical performance. I'm not trying to claim that in future as well, I'm 100% going to be able to deliver the same returns. But whatever is the worth of historical performance, there's a way you go. I'll once again request you have a look at that video. Once we upload this video on our channel, we'll provide the link of that video once again. But in all my recent videos, you can find the link of my AlphaSIP video in the description. Have a look at that video. My historical performance is covered in that. I'm talking of worst case returns of 12%. I'm reasonably confident that the liquidity based structure that we are liquidity based rebalancing sort of mechanism that we adopt should hold us good in the long term. Having said that, there is no guarantee. I don't even want to remotely say that historical performance is necessarily going to be replicated. But you can, for whatever it's worth, take the historical performance as a guidance, a normal SIP and AlphaSIP. Dono ka comparison I have provided in the video here. You should be able to, based on that, make a choice.
Heartful thanks to you, sir. Thank you very much.
Most welcome,
Good evening. Guha.
Hi. Hi. Tell me.
First of all, thank you very much for this nice content. So I have been following your video since last July, August.
Sure.
And just continue the last discussion what gentleman had. Even I recollect, you referred the latest, balance advance for HDFC, and you compared that. Just only one query here. When you compare the historical performance AlphaSIP strategy, it's a simulation as real performance, real investment performance.
This is we started offering it through ULIPs only from March of 2023. So we have been operating for last 2 years. So this is retrospectively applying the logic to the historical NAVs of these funds. So we don't have any client who has actually completed a 5-year cycle. So this is purely historical performance with hypothetical historical performance with the logic applied to the historical NAVs.
Okay, no problem. And second query is, I can see in click to invest in HDFC website, the fund charge is 1.35% as of now.
Yes.
So can you consider that is an expense ratio when it comes to mutual fund kind of similarity?
Yes. So it's, as I said, it's if in case of a regular mutual fund, the expense ratio of most regular mutual funds is in the range of 1.3 to 1.5%. In case of ULIP funds, it's about 1.35%. So it's similar to a regular mutual fund. My only caveat here, sir, is when you the reason I don't look at fund management cost of the fund is because I look at for me, the performance of the fund after charges is what matters. So when you look at based on the NAV of the fund, what has been the historical performance that the fund has generated, that is the return after this 1.35. So the NAV of the fund is after factoring this 1.35, right?
Yes.
Now, my only submission to you is that let's say if in case of ULIP there is no difference, all ULIP companies charge 1.35, but hypothetically let's say there is if we get a company which has a fund management cost of 1%, I would want to argue that don't automatically assume that the fund which is at 1% expense ratio is better than 1.35 just because it has a lower expense ratio. For me, what matters is what is the historical performance based on the NAV after, because the NAV is after factoring the fund management cost. So if you even if you're charging 2%, but after charges your returns are better than a fund which has a lower cost, I'll go with that.
Okay.
And the returns that if you go through my AlphaSIP strategy, the returns that I have mentioned is after factoring fund management cost.
Fund management cost, correct. And the like as you mentioned earlier, you had the tie-up or the relation with Bajaj Allianz, but last October you're no more with that relation because of the entry load. So what if HDFC also into the same entry load? Do you have any contingency?
That's the reason we are only accepting up to 31st March, sir. Because right now the HDFC is the only company which is not charging entry load, and the commitment that they have given us is that up to 31st March they are not going to charge for policies sold up to 31st March. After that, what happens? They have also not confirmed to us. So after 31st March, we can only hope and pray that HDFC continues. If not, we'll have to figure out what is to be done, and that's why as of now we are only accepting new clients up to 31st March.
Okay. And once this plan or the investment is active, then they can't impose.
After that, they can't change. Even after 31st March, even if the click to invest introduces the allocation charges, the existing plans will continue. So I have investments with Bajaj, which I started last year. So those policies, the allocation charge is still zero, even though they are in the new plans, they have introduced allocation charges.
Yeah. So honestly speaking, yesterday I went through the ULIP plans, 11 equity funds that had click to invest, HDFC. Many of those funds like mid-cap and all, actually they're unable to beat the benchmark. But only the only hope is that based on expertise and strategy you're talking about, that 12-15 parameters, so we'll outperform the benchmark.
So that's a valid point, sir. Although HDFC funds still are amongst the better funds compared to Bajaj, I think the performance. I don't know which fund you looked at. If you go and look at HDFC's Discovery Fund, which is their
fund FlexiCap. These are two funds only slightly outperform by 1%, 1.5%.
So I agree with you. If you compare it to a equivalent mid-cap fund in the offered by some of the leading mutual fund companies, the fund performance is better. Mutual fund companies have better fund managers, their returns are better. I agree with you. Both with, and this applies across ULIP companies, Bajaj, HDFC, across the board. I think the best fund managers are still with the mutual fund companies. But if you go back and the solution lies in what you said, go back and have a look at my AlphaSIP strategy video. I have done the simulation of, in case of Bajaj mid-cap fund, if you do AlphaSIP by rebalancing between Bajaj mid-cap fund and Bajaj bond fund, the historical performance of a 5-year SIP I have provided in my video. That is orders of magnitude better than a normal SIP, even the best mid-cap mutual fund.
Mid-cap mutual fund. Okay. Got it.
So don't look at the funds one-on-one, look at the strategy as a whole.
Strategy.
That's right. So that's
why we are all here and listening to you.
Yeah.
Because we have full trust in your strategy.
Thank you.
One last question, sir. When you rebalance, monthly rebalance, that OTV, we understand the process. As of now, we need to get the consent and all these things. Thing is, suppose we are going to rebalance, but can I intervene? No, don't do a rebalance, or no, you should go with your plan and do the rebalance.
Sir, it's your money. I can't do it. You in the current HDFC scenario, you don't give me the OTP, I can't rebalance.
Okay.
You don't even have to tell me that don't rebalance. You just say that I won't give you the OTP. That's it.
Got it. Thank you so much for your help.
Okay.
And time.
Sir, this is Naval here again.
Sure.
Yeah, so when I was asking about the underlying schemes and the amount invested, I was not so much concerned about your proprietary system of
Okay.
percentage of debt and percentage of equity, but I was
Okay.
more concerned about like the reconciliation of my own accounts, the reconciliation of my own money, like which underlying schemes probably currently the like money is lying into, and would I be able to like match them with the NAVs which are like provided by the HDFC ULIPs, probably daily or monthly, whatever it is. So would I be able to reconcile that?
So it's possible, sir. That information. So for that, I need to get a detailed statement for you, which I hope you won't need this statement on an everyday basis, right? This is probably something that you will do once a quarter or something.
Once in a quarter.
Once in a quarter. So once in a quarter, you reach out to my team. My team will get the statement from the ULIP company and provide to you. That will have all the details. But these special reports can only be we can get it for you, but through a special request. Our team will arrange for you. But again, as long as this is not something that you need every day. So once a quarter, we'll provide it for you. We will need to place a request with HDFC. We'll get it from HDFC and
also
share it.
You said that till the time you are doing tech integration with HDFC HDFC funds, till that time probably you would be sending their own statements on a monthly basis or something. Is that right?
Yeah.
So currently, like the reconciliation could be happening.
Yeah. So currently using the statements, you will be able to reconcile anyways with the HDFC statement. Yeah.
Okay. And later on, when you do the tech integration, probably we would be able to do that maybe once in a quarter.
Correct.
Got it, sir. Thank you. Thanks very much.
So just one last question, sir. Dr. Pandya here again. Is it going to be, I mean, what I have understood is a lock-in of 5 years, and we will need to stay invested for at least 8 years, right? If I'm not mistaken.
So you invest for 5 years. At the end of 5 years,
the SIP continues till 5 years, 2.5,
Yes.
2.5.
Yeah.
And after 5 years, I need not invest, but I need extra amount, but I need to stay invested. What I'm trying to say is that.
No, so at the end of 5 years, if you want, you can withdraw everything in one go. But if you want to, at the end of 5 years, if you stop your SIP, but you want to invest whatever that 12.5 lakhs that you have already invested, that you want to keep it with me so that I can continue to rebalance, that can happen only for a maximum of another 3 years.
Okay. All right.
But you can, if you at the end of 3 years you want to stop your SIP and you want to withdraw everything at the end of 5 years, that is also possible, no charges. But if you stop your SIP, the only restriction is you can continue to keep the amount that you have invested for another maximum 3 years.
3 years. Then I need to withdraw, right? Completely.
They will mandatorily redeem and send the money to you.
Okay. So that extra 3 years, you will, whatever mortality charges and whatever is there, that will be deducted only that much, right?
Yes.
Right?
Yes.
Okay. And thank you.
Mr. Guha, Devesh here, one question.
Mm-hmm. Yes, sir.
Mr. Guha, at the time of rebalance, when we get the OTP, do we come to know what has been, what amount of debt has gone into equity and where vice versa? So in case we have some a different opinion, we need not give the OTP to you.
Honestly, I haven't seen the OTPs, sir. But I don't think that the amounts are there in that.
Okay. But the switch details or anything, it's simply the OTP comes.
So it's just it tells you that a switch of so and so amount has been initiated without specifically saying which fund to which fund.
Okay.
Yeah.
Thanks.
Yeah.
Mr. Guha, can you hear me?
I can hear you, sir. Can you introduce yourself, please? What's your name?
Yeah. My name is Phil. I just want to ask you one question. You mentioned that at the moment you have tied up with HDFC Life.
Yeah.
Now, what happens? Of course, there was a query earlier that what if allocation charges are imposed at a later stage? But given that the number of zero allocation funds are, charges, such funds are very limited, wouldn't that restrict your choice in the event of such charges being imposed later?
No, so anything that you start now will remain zero. Right now, HDFC plans do not have any zero allocation up to 31st March. And any policy that you buy before 31st March will continue to remain zero allocation throughout the life tenure of the policy. Even if, let's say, next year, after 31st March, HDFC Life introduces allocation charges in click to invest, that will apply only on policies sold after that. Your policy will continue to remain zero allocation for its entire tenure.
Okay. No. What I mean is, doesn't the universe of such funds come down drastically? As it is, there are not many funds with zero allocation charges.
Sir, I have a differing take on this. I tend to be more hopeful that market forces will force. I know for a fact that Bajaj Allianz, for example, they abruptly stopped zero allocation in October. They introduced allocation charges, although their allocation charges are still on relatively modest. It's about 2.4%. It's good if it was not there, but it's not egregiously high. Most of the other ULIP companies charge you allocation charges of the order of 6 to 10%. But what I know for a fact is Bajaj's market share after October has completely collapsed. And that is forcing a rethink. And as a result, even earlier they had the lowest. They had gone to a plan where allocation charges were of the order of 5 to 6%. So in February they have had to reintroduce a plan where the allocation charges are only 2.4. So my point is, markets are self-correcting. When you have a situation where on mutual funds, which is a much larger market, there is no allocation charge, there is no entry load. Ultimately, ULIP companies will be forced to, fall in line. So I tend to remain hopeful that, and plus, over time, ULIP itself will see influx of new players like Geo, Grow Mutual Fund. I know for a fact has plans to get into insurance. As some of these new players come in, the market, an entity like Geo will very likely, they care about market share and nothing else, right? The moment they realize that allocation charges is something they can differentiate themselves from, they will go hammer and tongs with a zero allocation plan. And when you have big players introduce zero allocation plans, I'm far more hopeful that market forces will make sure that we'll have an increasing array of companies which offer these zero allocation charges ULIP.
So one more question. I just want to know, you mentioned about lump sum payments. Now, in the case of lump sum payments, what would you say, up to what age can a person invest? Can a senior citizen, for example, invest in a lump sum amount? Would that be, would the returns be attractive enough?
As long as you have, two things. So in case of for ULIP, for lump sum or SIP, just make sure that, see, in a ULIP, you need to find out if you're there is an investor and there is an insured person, because in the ULIP you also get an insurance cover. So in most cases, the investor and the insured person is the same person. But in case of senior citizens, if you try to insure the senior citizen, then the insurance charges are very high. So amount that is left for investment goes down. So we usually suggest that you have the insurance in the name of a child or a grandchild. The money will still come to your account only upon maturity, but the insurance deductions will be based on the mortality charge. The insurance charges will come down if the insured person in your policy is your child or your grandchild. And whether it's suitable for a senior citizen, the way I look at this, sir, my father is 75 years old. I sell this only if you have a time horizon of 5 years. So AlphaSIP the way I look at this is, as long as you have a runway of 5 years ahead of you, if you have taken care of your expenses that you are likely to incur in the next, do your math. I mean, let's say if you need whatever is your current standard of living, you need 50,000 or 1 lakh rupees per month to get by in a month. Based on that, how much amount you need to take care of your next 5 years expenses, that you keep aside in FD. If you have any surplus beyond that, because this is money, that is the amount that you will not need in the next 5 years, that I think you can think about strategies like AlphaSIP. But you should if you should be sure that you don't need this money in the next 5 years.
Yeah, I just wanted to know what would, see, for a senior citizen, somebody say above 60 years, what would be the mortality charges if there's a lump sum investment?
If the insured person is also you yourself?
Yes.
So it will be high. Why don't you, we have a number on our, in all my videos, I have a number. Why don't you drop a message on that number with your date of birth? We will calculate and let me know the amount. Amount also not required. Just let us know your date of birth.
I think you mentioned the amount, not 25 lakhs or something.
25 is the minimum. You just let us know your date of birth. We'll calculate how much is the mortality charge that will apply for your age.
Okay, sir. Thank you.
Okay. Any other question? I am here for as long as anyone wants me to be around. Feel free to ask as many questions.
Sir, tomorrow, if any other competitive player comes, as you were giving an example of Geo entering into insurance, so just curious to know, will you be allowed to partner with multiple insurance companies in that case, or you'll stick to one? Or
yeah, so we at this stage, so there are multiple options you can explore. At this stage, IRDA allows, if you're an individual, then you are allowed to be an agent of only one company at a time. It's likely to be liberalized in the coming year. There's a very high likelihood. It's not in or not yet in place, but there's a very high likelihood that this is likely to be increased to 3 insurance companies at a time. So that gives you a lot of leeway. And ultimately, there is always an option of becoming a corporate broker where you can be agent of multiple companies at the same time. So we'll explore if there is a compelling case of signing up with more companies in future, we will consider those options. So, but for us, I think, as I said, it's the only thing that matters is, the plan should be zero allocation or as close to zero allocation as possible. And I need to be convinced that we have good fund managers managing the funds. These are the only 2 criteria here. And if we have new companies where we are convinced we should be a broker of, we'll figure out a way to empanel with them.
Thank you.
Hi, Indraanil. My name is Yusuf Pujari.
Hi, sir.
As per your previous video that you posted on...
Can you be a little louder, sir?
As per your previous video that you posted on YouTube, the returns were showing at around 9%, small cap, 8 or 9%, I don't remember exactly. Yeah. But then considering the strategy, what would be, just in case the market gives a run up,
if you complete 5 years?
Since suppose a small cap is giving you like 25% cap, just because we will not get 25% cap because we are in debt also. So it would be that lag or the difference.
Are you asking me what is the return with a mid-cap portfolio for the AlphaSIP strategy historically? Is that the question?
Yeah, exactly.
I'll just show you what is it that I have shown in the 1 sec.
Had this strategy continued for 5 years in small cap, what would be the returns as of now?
So I've covered this in the historical performance video. I'll just show you that slide once again.
Yeah.
So this is the historical performance of a 5-year SIP with a Bajaj mid cap fund on the equity side, and Bajaj bond fund on the debt side. Worst case so far has been 18.5%, best case 37.87%, median case is 29%. So if you complete 5 years, historically the worst case so far has been 18.5. Worst case was April 15 to April 20. That means your 5-year SIP is ending in the middle of COVID. If you did a normal SIP in Nifty during this period, your return would have been negative 6%. Most mid-cap funds during this period delivered a SIP return of negative double-digit returns. I am talking of during that 5-year period, historically, AlphaSIP has delivered positive 18.55. Again, I cannot stress enough, this is not a guarantee of future returns. Take it with a pinch of salt. Take it as a guidance. But historically, this is at best a guidance, but this is what historically the strategy has produced if you complete 5 years. Worst case, 18.55.
Thanks for the clarity.
Okay.
Guha Phil here once again.
Sure.
Just one more query. Now, in the case of a lump sum one-time investment, you mentioned that, there is this, rebalancing limit of 3 years beyond 5 years. Does that apply for a one-time investment?
No. In lump sum, you just complete 5 years, because in lump sum there is no follow-on investment commitment. So you complete 5 years. After that, you can withdraw anytime, and you can continue to stay invested for as long as you want.
So there is no time. There's no time period, for which rebalancing can be done.
Can be done. Yes, you can stay invested unlimited after you have done your investment.
And the rebalancing will continue indefinitely.
Will continue for as long as you are invested with us.
Thank you.
And mind you, in case of lump sum, as I said, even at the end of 5 years, it will continue to remain free for you. We won't charge you anything even after 5 years. In case of SIPs, we charge you 1% of the AUM after 5 years. But in case of lump sums, we don't charge you anything even after 5 years.
Thank you.
Anything else? Any other question? I'm really flattered that even at the end of 3 years, 3 hours, we have still 22 participants left. I hope I was able to add some.
Sir, one last question, if you don't mind.
Please go ahead, sir. I'm here for
as long as I'm sorry. I think we are postponing your dinner time.
I am as long as you all have taken out time for this session, I am around for as long as it takes to answer every question.
No. I just would like to know, normally, in principle, how much is the insurance cover for the usually in the 2.5 lakh premium, and of course it depends on the age of 50 years old.
In any policy, the insurance cover is 10 times of your annual investment amount.
10 times. Okay.
Yes.
That's it. Okay, sir. Even if it is one time, it's going to be 25 lakhs into 10.
Okay, so you can see, this is how it works.
It's going to be?
You can choose how many times insurance cover you need, right? So you can choose 7 times also. So then your mortality charges will come down. But for the maturity proceeds to be tax-free, the government's requirement is the amount has to be within 2.5 lakhs and the insurance cover has to be 10x. Right.
Okay. So in the one-time thing, that will not be tax-free. That will be taxable completely, right? One time.
12.5.
12.5.
12.5. And even in case of SIP, if your investment amount is, let's say, 5 lakh, if it is more than 2.5 lakh, even then it's going to be taxable, right? So if it is taxable, then you don't have to take an insurance cover of 10x. You can go with the insurance cover of less than that, maybe 7x or whatever. And also one more thing, which if we have any other insurance policies, I hope that is not going to be counted, is it? Or you are saying collectively, I should have no other policy other than the ULIP policy, 2.5 lakhs premium, or how is it exactly? What I'm trying to say is, I have other policies.
and if it's exceeding 2.5 lakhs, so will
So if
this
you are,
be tax free?
so if you
Other policies might be meaning not ULIP, other traditional policies. I'm saying.
Traditional policies don't. If you,
Huh?
you should, if you have two ULIP policies concurrently for which you are paying. So let's say if you start at 2.5 lakh this year, that you pay for next 5 years. Next year you buy another 2.5 lakhs. That will go for 5 years from next year, right? So these two policies will have an overlap of 4 years.
Right.
So for this period, you can claim tax benefit on only one of the policies. Was I clear?
Okay. Yeah. So, I mean, but the premium of other policies can be there, right? I mean, 2.5 lakhs.
Non-ULIP doesn't count for this.
Doesn't count, na? Okay. Thank you.
Mr. Guha, Devesh here, one last question.
Yes, sir.
What's the name of that HDFC life insurance, or the ULIP that
Click to invest.
Click to invest.
Yes. Click. Number 2. Invest.
Okay. Got it. Thank you.
Yeah.
Mr. Indraanil.
Hi, sir.
Yeah. This is Colonel Gautam, and I have got in touch with you earlier also.
Sure.
And I am from the army.
Sure.
So I don't have that much knowledge, but hats off to your knowledge, because I've been following your video and today's session also. I am ready to invest, and superb knowledge, and hats off once again.
Thank you, sir. Thank you. Very flattered, and especially coming from somebody from the armed forces, it means really a lot to me. Thank you.
Thank you.
Hi, this is Vidya.
Sir, we will have to introduce this add this as a biller in our bank, or it will be taken care by,
we'll help you set up the SIP with the, we'll have to set up a ECS. So in the first year, you don't have to do anything. In the first year, you have to anyway do 1 year full, 1 year worth of investment you have to do upfront. From second year, we will have to set up a SIP. So whatever you have to set up a ECS. So yeah, it has to be added as a biller and stuff. So we'll help you with that process.
Okay, thank you.
Hi, sorry.
Hi, this is Vidya here.
Hi, ma'am.
So when you say one time, do you mean just the 1 year corpus will be put in one? Say, I'm interested in the 2.5 thing. So should I put 2.5 or it's 12.5 upfront for all 5 years?
No, on the first year. 2.5 you have to put upfront. From next year, you can. Next year it will be 2.5 lakh divided by 12 per month.
Okay, then one more thing, is there somewhere I can see that NAV graph of your particular that SIP strategy, because that will be then NAV, I can visualize, right, how it has grown. Like let's say I have invested 2.5 lakhs in 23 when you started. Now how much it has grown? So somewhere I should be.
So my most recent video, if you see, which I published just 2 days back, I have given the performance of how actually I have not done it for 2 years. I have done it for last 1 year since the correct since December. So I have uploaded my own 3 personal policies that I have with Bajaj Allianz. I bought these 3 policies in December 2023. And what is the return that I'm getting on all these 3 policies? I have publicly uploaded the statement, and I have explained how much return I am getting on the 3 policies. It's there in my most recent.
But there is no place like let's say if it is in the case of mutual funds, I can open just any app, right? Coinzero, the whatever, right? And then I can see the NAV graph, how it has grown.
So you can see the NAV graph of the funds. That the historical NAV of the funds is available. But
fund is available, but you will be anyways rebalancing, right? Then I cannot. Then it keeps changing, so that's right.
So ma'am, so I understand where you're coming from. So we publicly give you this the chart that I just showed you. So this is the historical performance of our AlphaSIP strategy when applied to the mid cap fund. So this we instead of giving the NAV graph, we show you in this format. I will create a similar chart for HDFC funds. That is not HDFC. We have just gone live with, but it's similar to HDFC fund performance is similar between HDFC and Bajaj. So this is the format in which we give NAV wise, NAV growth wise. We have not created. You have given me some. I take it as an input. Let me think about it. If we can release this.
Yeah, because that becomes easy, right? So you rebalance once a month, right?
Yes.
So for that month, maybe also that is not revealed. At least are you revealing past data? I'm not looking at present data, but let's say from 2023, how you have rebalanced till 24 end, at least that much you can reveal, right? So that I understand how the market have reacted and how you have changed. Also, that will be.
We have so far not done that, ma'am. Let me think about it to what extent we can reveal that. We so far
because
the only publicly
whatever replication scenario you are saying, that is not applicable, right?
Sorry. What is not applicable?
The replication scenario will not happen if you are revealing maybe even latest 3 months you can even not show. But before that, if you show.
See the challenge. I'll tell you. I'm not trying to. You're right. For historical, the risk is not that it will be revealed. What has happened is that the AlphaSIP strategy itself keeps on getting evolved, right? When we started offering this 2 years back with ULIPs, at that time we were using about 8 to 9 variables for deciding the equity allocation every time. So since then, at this stage, the strategy itself is refined to the extent we now use almost 15-16 variables to decide on the allocation. So the historical performance and the churning that we did based on what the strategy was 2 years back is, I'm not saying dramatically different, but is the month on month how the portfolio has changed is definitely different today based on the current logic compared to what it was 2 years back. So technically I can give you what is the historical performance of how we have rebalanced, what is the rebalancing that would have happened based on the current 15 variable logic today. But if you then go and look at my own statements, maybe though they may not it may not be the same, because at that time the logic that we had might have been with a lesser number of variables, and at that time accordingly the churns would have been different. So that's the only.
Okay. Do you think this will keep evolving because now you have this strategy and you have
it will evolve. It will definitely. So when I say evolve, I essentially mean the strategy keeps on getting better. So for me, there is a very definite. So for me, there's a very clear definition of a strategy becoming better. This chart that I showed you, 2 things I target. I want to improve this worst case 18.5 and the median case 29%. If tomorrow I see that on top of the 15 variables I use, there is a 16th variable, if I add that to my logic, and that helps improve the worst case from 18.5 to 19.5, or if it helps improve the median from 29 to 29.5, I will add that.
Okay.
Right.
Yeah, that makes sense. And also about the rebalancing, the OTP thing you said, if we are not, anyways, we are not going to be aware of what you are planning to rebalance. So I don't know what is the purpose of OTP, because anyways you will.
No, that's a
because even whatever is already there also, I am not aware.
No, that's a ULIP company's requirement, ma'am. Because the policy is yours, right? They right now they have. See, in case earlier when we were offering Bajaj ULIPs, with Bajaj I have a tech integration, all this OTP and all is not required. I just get a one-time consent from you through a OTP, and based on that I can rebalance. With HDFC, I don't have that, so have that integration with them. So HDFC's requirement is that any switch between funds can be done only based on the OTP that is sent on the registered mobile number of the policyholder. So it is
So
HDFC.
basically, we are paying you for the rebalancing only.
Yes, absolutely, ma'am.
Otherwise, that is the only advantage, right? Otherwise, we can just do
absolutely.
whatever we want.
Correct,
So it is better not to give, not to skip the OTP part and continue
Not to.
leave
So
it.
obviously, you should. I mean, if you're doing it through me, then you're doing it for the rebalancing. So you should.
Yeah.
Then you should not withhold the OTP. Yes.
Yeah. No, that's why I asked whether, because the whole purpose is defeated. So that's why I asked.
Yeah.
Okay, then maybe if possible, just think about that. And you are speaking about this 100%, 100 client or so, right? Like, why is that the case? Like, if this is mutual fund kind of scenario, like, anyways,
For the same reason,
rebalance.
ma'am. Since I have to do this manually. I have to call for. See, with Bajaj, I had a tech integration. I could do the rebalancing through in an automated manner. So there is no limit on the number of clients I can service. But till the time with HDFC, I have to do this manually. Every client I have to call and get the OTP. Then there is a limit on number of clients that I can service. So till we are able to automate this, with my current manpower, I cannot take a very large number of customers.
Okay, actually, I don't want to sound bad, but just trying to understand, is it possible? If you feel comfortable, just reveal the size of your team. Like, let's say in tech team, how many people you have, or as a company, how big are you?
So we are 16 people in the organization, not a very large organization, of which half is technology, half is sales.
Okay. So, is there some place where I can see your background, like, or your team's background?
On my website, ma'am, and my LinkedIn, you can get a link of my LinkedIn profile. You can see my educational background, my professional background. Go to metacaps.ai. You on the page you will find the team members profile and the link to our LinkedIn profiles.
Okay, so if I decide to invest, then what is the next step?
Go to any of my go to this website called metacaps.ai/products. So there you will see there are 3 options, variants of AlphaSIP that are listed there. Whichever one you are interested in, you will have to register through our website for that variant. Once we receive your registration, somebody from my team will call you.
Okay, after registration.
So in registration, I just ask for your name, contact number, so that I can contact you, and which of the 3 variants you are interested in. metacaps.ai/products.
Yeah. 3 variants is that tax saver, pro, and all those things.
Correct.
Within
tax saver, pro,
tax
pro max.
do you have that any variants of whether large cap, mid cap, those things, or that also you were?
So my default allocation is 50% large cap, 50% mid cap. But I give for those who choose to, if you want more aggressive, be 100% mid cap, we allow you to do that. But by default, we do 50-50 between large cap and mid cap.
Okay. So basically, anyways, even if it is equity, you will end up investing in the existing. Because you have tied up with HDFC, you will end up investing in HDFC.
Yes. So that's one limitation of ULIP. I have to be within the universe of the ULIP company. But we also we select the ULIP companies with which we partner only based on if we are satisfied with the fund performance. As I said, we selected Bajaj because as per our strategy, if I apply my strategy to the Bajaj mid cap fund, the worst case return so far is 18.55. We tied up with HDFC because when I apply the same thing to HDFC, we get a similar worst case. So yes, your choices are limited, but we have done very extensive due diligence before selecting these ULIP companies.
Okay, thank you.
Okay.
Good evening, sir.
Hi.
Hello. Good evening, sir. This is Sudipto here.
Hi, sir. Hi.
Sir, I have 2 specific questions. For a lump sum investment,
yes,
that minimum 25 lakhs you will allow through AlphaSIP. So what is the sum assured in this 25 lakh, say for a period of 10 years?
So in case of lump sum, the insurance cover you are asking?
Yes.
So in case of lump sum, in the ULIP parlance, lump sum investments are called single premium policies. So in single premium policies, the insurance cover is 1.25 times of the investment amount. So if it is 25 lakhs, 1.25 times of that is 31.25.
Right. And here in this lump sum, you are not very sure that 12% CAGR will be there.
Yes, the returns are very similar. My team, if you are interested, I'll just message us. The returns are similar to SIP.
Right, sir. But then you have told that you cannot rebalance because it's a one-time lump sum. You cannot rebalance.
No, of course we can do rebalance. We can do everything. We can do everything that we can do in case of SIP.
Right. In lump sum also you can rebalance the equity and debt part.
Yes.
Right. And sir, I can extend this from 10 year to 15 year later if I want.
What is 10 years? Sorry.
Means lump sum investment. There is a lock-in of 5 years.
You can invest. So in HDFC allows the policy term to be of maximum 40 years.
Right.
So after 5 years, you can withdraw or you can continue up to 40 years.
Suppose my age is now 50. So I can extend it maximum up to 25 years or 20 years.
No such requirement. You're 50. You can stay in. So the maximum they will allow you is 40 years from today. So by the time you're 90.
Okay.
Sorry, in lump sums, there's one thing that I forgot to explicitly mention. In case of lump sum, HDFC Life doesn't have a zero allocation plan. About the reason they have allocation, they have 1% allocation charge if your investment amount is above 25 lakhs. Below that, the allocation charges they accept below that, but allocation charges are higher. And that's why we keep a minimum of 25 lakhs, because above that, the allocation charge is only 1%. It's not zero allocation, but we still go ahead with that because you pay 1% allocation charge once, right? And and this 1% will get spread over a 5-year period. So the per year impact comes to 0.2%. So the impact of these allocation charges are significantly lower. So that's why in case of lump sums, we are okay to accept an allocation. So 0.2% means if I am able to generate 15% return for you, you will still end up getting 14.8.
Right.
So, and there is no cap. There is even if you are somebody who is 50 years old, you can stay invested with us till the age of 90. For the 40 years is the maximum policy term that is allowed.
Right.
Okay.
Thank you, sir.
Okay. Any other question?
Hi, sorry, this is Vidya here. I wanted to check about this tax part. So, is it like if I already have any insurance, how about the new tax regime under which head this 2.5 lakhs is tax free?
If you already have, so you
not ULIP. No,
if it is not ULIP, so for 2 point, if it's not ULIP, then it doesn't matter.
Oh, then it doesn't matter. Under new tax regime also, this
under the new tax regime also, it will be tax free as long as your total investment amount is within 2.5 lakhs. You should not have another ULIP of more than 2.5 lakhs.
No, just this.
Yeah.
Thank you.
Guha ji, Phil here once again.
Yeah.
I just wanted to you to clarify, because I just checked up on your website and I find that this single term plans, I don't find any.
We have not listed that, sir. Just drop us a message on our WhatsApp number. If you go to any of my previous videos, we have a WhatsApp number in the description. Just message us. For single premium, we have not yet officially started accepting registrations on our website. because I've not created a video as yet for that, because the return numbers are similar to the SIP, but it's not exactly the same. So since I've not created a video, so we have not started accepting registration for that. But if you're interested, just message us on our WhatsApp number. We are accepting investments if you are prepared.
But are the return figures
similar
worse than SIP, or are they better?
So I'll show. So I just showed you the. I'll show you the numbers. So this is the historical performance with a large cap fund. The worst case is 16%. Median is 22%. And this is with a mid cap fund. The worst case is about 20%. The median is 26%.
Okay.
Very similar, if anything, slightly better than the SIP.
And in the case of a single premium plan, do the some same features of the other plans apply? Do we have access to you, or what is it like?
Yeah, everything is through us, sir. And once our app
what I mean is, what I mean is, do we have access to you directly, or do you deal with the RM? What is it like?
So in directly through me is above 50 lakhs in case of single premium. At 25, you still have to live with my team.
Okay. Yeah. Right. Thank you.
Yeah, but I'll keep doing these online sessions, sir. So it's not as if that. So you can still interact with me through these live sessions, even if your amount is less than 50.
Thank you.
Yeah. Any other question?
Since I could not join on time, would this recording be available or something like that?
We'll make it.
Great.
So it'll require. It'll take some time to edit this, but we'll release the recording.
Okay, thanks.
Sure. And any other question? I'm happy to be around for as long as you all have any questions. I had promised in my video that I'll answer every question before I call it a day.
Okay, I had a question. I thought since I did not ask because I joined late and I did not want to repeat. Maybe if someone has asked.
Please go ahead.
But
Sir. Please.
Okay. So in your video, which I saw around 2.5 months, it was about Bajaj. So Bajaj is no more, and now it is to HDFC. Is that the case? One, because I already have HDFC unit link plan in my name. So 2,40,000 is the limit, is what we are saying for non-taxable. Now, if I do again for HDFC Life, would that be combined together, or that is? I mean, you should have got what I'm. Yeah. Okay.
Yes. So it's not that you all see. These are two different things. We used to earlier offer policies of Bajaj Allianz, and we are now distributing policies of HDFC because Bajaj Allianz has introduced what is called allocation charges, which is a form of, in mutual funds there used to be something called entry load. Similar to that, Bajaj Allianz has come up with allocation charges. So their charges have gone up, and as a matter of principle, we only sell zero allocation charge ULIPs. HDFC is the only one which is still selling zero allocation charge ULIPs. So we moved to HDFC and we are selling plans of HDFC. With respect to your other question, if you already have a HDFC policy, the rule is your ULIP investment up to 2.5 lakhs is tax exempt only as long as your total investment in a year in all ULIPs put together is within 2.5 lakhs.
Okay.
So the only other in this case, the only other option would be that you should, if you have any other family member, maybe your spouse who doesn't have any other ULIP plan, invest in your spouse's name.
Okay, fair enough. And as there was already one question on one-time investment. So let's say if I give X amount just for considering 10 lakhs, then that 10 lakhs you would be putting to debt and you'll be rotating like any other.
10 lakh is lump sum or 10 lakh is
lump sum.
So for lump sum, the minimum is 25.
Okay. The minimum is 25. Okay.
Because in below 25, the allocation charges are very high. Above 25 lakhs, the HDFC charges only 1% allocation charges. So that's why we have kept a minimum of 25.
25 lakhs.
Yeah.
Okay. And can we have a joint, with husband and wife also? The ULIP can be joined?
I'll have to check, sir, if the investment can be joint or not. But even if it is joint, see, the investor is, to the best of my knowledge, I could be wrong, so I'll have to check and confirm to you. But to the best of my knowledge, the joint plans are not. In case of ULIPs, there has to be one investor, and there has to be there has to be one insured person in the policy. You can yourself be the insured person, or you can have your spouse or child as the insured person. But I don't think joint policies are allowed.
Okay.
But I'll confirm and reconfirm all this.
One last question. Now, when you switch between debt fund and, let's say, any market, whichever I opt for, let's say small cap, so when the switching is done, that would be done directly by you, or is something like we'll have to be engaged? Because I believe OTPs are required and all, right?
So as of now, it's not an automated process. Earlier with Bajaj, it was automated, so there was no OTP or anything required. With HDFC, we have not completed any integration with the tech integration with them. So when we switch, we can initiate the switch, but the switch can be completed only. So HDFC will send a OTP to your email and phone, and somebody from my team will reach out to you. If you are okay to share the OTP with my team member, they will punch in the OTP on your behalf, and that's when the switch will be completed. So that this manual leg is there if you are doing right now with HDFC. And you should sign up only if you're okay to with this manual part. So we will usually we will not call you, we will WhatsApp you. So as long as you can share, the OTP will come on your email and phone, SMS both.
Right.
As long as you share the OTP with us, so on WhatsApp, that's all that we need from your side.
Okay. And one time as well as SIP, both locking period is 5 years.
Yes.
Okay.
I think the plan name is Click to Wealth or Click to Invest.
Click to Invest, sir. Click to Invest.
Okay.
Any other questions, sir?
Guhaji, Phil here again.
Yeah.
I just want to know, does this whole OTP regime apply even for one-time investments? Or?
Yes, sir. As of now, OTP is there for everything. So, but I'm not promising this. I'm hopeful that we should be able to complete the tech in, because it's painful for us also to do this because it requires a lot of manual intervention. A lot of my people have to be committed for this activity. So we are after HDFC to give us a tool through which we can do the rebalancing in an automated way. So hopefully in the next 5 to 6 months, hopefully we should be able to have something more automated than this.
Okay.
Yeah.
Although I'm asking a question, although the answer is with you, it depends on you. But let's say today, if I give you a lump sum amount, and what would be, because I have heard your videos where you say that you are expecting a melt up for short term. So you would be investing in debt fund or directly in market? Let's say tomorrow if we sign up with you. Just out of curiosity.
Yeah, so as and when my indicators, my variables start to point out that the melt up is about to start or has already started, we will make your equity allocation as close to 100 as possible, 80 to 90% maybe. And once the melt up has played out, once we feel that now a recession is close by and the markets will correct very sharply, we will again go down to maybe 20-25% equity.
Okay.
So I gave that example in my most recent video, how over the last 6 months, before this correction started, we were at 75% equity. After this correction started, we came down to 25% equity.
Yes. And HDFC allows rebalancing how many times in a year, or it's unlimited?
Yeah, so HDFC rebalancing is allowed any number of times. First 4 times rebalancing is free in a year. After that, they charge you 25 rupees per switch. So hypothetically, even if we rebalance every month, so 12 times we will rebalance. So first 4 times it will be free. The remaining 8 times you will pay 25 rupees per month.
Right. I think at least my questions are done. Thank you, sir.
Thank you. Anyone else, sir?
Hello, Guhaji.
Yes, sir.
Yeah, I'm Dr. Thakral, and I have one question about that lump sum. Maybe I don't know whether you already answered or not.
Please go ahead.
In the lump sum, if I am the investor and I propose my children who are abroad and they are not having any PAN card or this of India, so the amount on maturity or means I can take, or it has necessary to go to my children's account. They have to open the account in India.
Your children are they're not minors, right? Or are they minors?
No, they are not minors.
So if they're the rule is that at the time of signing up for the policy, when you start the policy, if the insured person is a minor, then the proceeds will go to the insured person once the insured person becomes a major. If the insured person is already an adult at the time of starting the policy, the maturity proceeds will come to your account.
Sorry, if they're already adult, if they're already adult and they are outside India, and I am investing, so means my question is
the money will come to your account.
Open the account.
They don't need they don't need an account because the money do they have at least a PAN number in India?
No,
they don't have a PAN number. See, more in this case, since the money will not come to their account, I don't think a PAN number or bank account is necessary for the insured person. But I'll check on this. I'll reconfirm if.
Yeah, thank you. Because this was my main concern and question. Yeah, thank you.
What's your good name you mentioned, sir?
Dr. Thakral. I will write a short.
If you can on my so we have a WhatsApp number.
Yeah, I will write the message.
I'll just drop me a message. I'll have somebody from my team check up.
Thank you so much.
Sure.
So 2 questions. I just checked out my account. So my yearly, which I was paying 1 lakh to HDFC Life, I am not going to pay anymore because 7 years was my pay period, which is over now. So now, if I start 2.40 lakhs,
it will be exempt. It will be exempt.
It will be exempt, right?
Yes. You should not have 2 parallel policies going on. That's it.
Okay, but that is up. But the its locking period is 10 years policy this, but 7 years is completed.
Yeah.
So it will be separate, right?
No. Yeah.
Oh, and if I start with 2.5 SIP, minimum years is 5 I have to pay, right?
Yes.
Although if I go for 10. Okay.
Yes. So I'll just repeat in case. See, when you log in the policy, we have to punch in the policy SIP period as 10 years. But you have an option to discontinue after 5 years. But if you discontinue earlier than 10 years, then so you can keep the money only for another 3 years with us. So if you stop your SIP at the end of 5 years, but you want to you at the end of 5 years, if you want to stop your SIP and you want to withdraw all your funds, that is possible. But if you want to stop your SIP, but you want us to keep rebalancing whatever you have invested, that will be possible for only another 3 years. That means till end of year 8.
Got it.
Okay.
Hello, sir. This is Puneet. I had a question about the lump sum payment option.
Yeah.
In that case, I heard that the following years, after 5 years, there will not be additional management charges from your team, right? Up till 40 years total.
Yeah.
Okay, that's great. And just curious, how are you making money in that scenario? Is that the upfront commission?
No, so in case of lump sum, we actually get a mutual fund kind of a brokerage, which is, it's a trail brokerage that we get. So whatever is the value of the investment, on that we get a certain percentage. It's lesser than in mutual funds. You get about 1% of the value of the investment. In case of ULIPs, it's lesser. It's about 0.7 to 0.8%. But in case of lump sums, we keep getting a commission as long as you are invested with us. So that's why we don't charge you anything. In case of SIPs, we get only one time upfront.
Sounds good. And the fund management charge stays at around 1.35, right?
Yeah. Fund management charges is same. So out of that 1.35 that the fund they charge you, they share about 0.8 with us.
Okay. I think that's great. Thank you so much.
Yeah. Any other questions? Should we call it a day then?
Last question. Which fund would you suggest now?
Can you please introduce yourself? I don't know who's this.
Yeah, sorry. My name is Nilesh Mandre.
Hi.
So one question, that if I start the policy, policy now, which fund would you recommend to go? I know it's about on the risk appetite, but let's say 10 years is what my horizon. Then would you recommend small cap, balanced fund? Which one would you recommend?
See, in our case, as I said, it's not a fixed allocation, right? Every month we rebalance. Today, okay. So we in our case, that's the difference between a normal SIP and an alpha SIP. Here if we believe that the markets are likely to go up, then we will move almost 80-90% of your money into equity funds, so that when the market goes up, you also benefit from that. And if we think that markets are going to correct, then we will move all your money into debt funds, so that even in debt funds, you get a FD kind of a return, even if markets correct. So you are protected from that correction. So it's not a fixed, even if you invest with us for 10 years, it's not as if that your money is going to be there in one single fund for 10 years. Okay. We will keep moving your money between equity fund and debt fund based on our logic. I'll just once again repeat, there is a video in which I have explained the AlphaSIP strategy in details. The link of that is there in all my recent videos. So I'll suggest go and have a look at that. You'll be able to understand what I'm trying to say.
Sure. I'll go through it. Yeah.
Sure. Thank you. Any other questions? I'm absolutely thrilled and flattered. We still have 17 people in the call. I'm truly honored. But if there are no more questions, then I'll call it a day. I'll do one last check. Any more questions?
No, sir. Okay. Thank you for spending so much time.
Thank you so much. Thank you so much for your time. Really appreciate all of you joining on a weekend. Thank you for your time.
Thank you, sir.
Good night.
Thank you, sir.
Thank you.